All right, today we're tackling a pretty chilling prediction from a legendary investor, Jeremy Grantham. Now, he thinks the US isn't just, heading for a little downturn. Nope. He says we're on the very edge of a massive, historic financial collapse. And it's all because of something he calls a super bubble. So, what in the world is that? And more importantly, could he be right?
So let's just start with that quote right there. The U.S. is entering a period of severe financial distress. I mean, wow, that's not pulling any punches, is it? This is the absolute core of his warning. And you have to understand, this isn't just some random analyst. This is a guy with a remarkable track record for calling major market crashes. So when he says something like this, you bet the entire financial world sits up and pays attention. Let's dig into why.
Okay, so here's how we're going to break this down. First, we'll talk about why this guy's voice even matters. Then, what is this super bubble thing? After that, we'll look at the ominous signs he says are already here. We'll touch on inflation, because that's a huge piece of the puzzle. And finally, we'll get into his strategy for, surviving all this.
All right, first things first, let's talk about the man himself. Who exactly is Jeremy Grantham, and why should we be listening to him?
So yeah, Jeremy Grantham is not just some talking head on TV. He's a legendary British investor, co-founder of the firm GMO, which manages, get this, over 118 times billion dollars. But his real claim to fame? He's a student of history, and he has this uncanny knack for spotting bubbles before they pop. He's done it multiple times. I mean, think back to 2021. Everyone was euphoric. Markets were soaring, right? And he came out and predicted the S&P 500 would get cut almost in half. When you have a track record like that, well, you just can't ignore what he has to say now.
And that brings us to the absolute core of his entire argument. It's this idea that we're not just in a regular old bubble. No, this is what he calls a super bubble. So, what does that actually mean?
Yeah, a super bubble isn't your average market getting a little frothy. According to Grantham, this is a whole different beast. It's way rarer and way, way more dangerous. We're talking about frantic, crazy speculation happening everywhere at the same time. In stocks, in bonds, in real estate, even in commodities. These things only happen a handful of times in a century, and when they burst, man, they can totally reshape the entire economy for a generation. And here's the thing, we've seen this movie before. Grantham points to 3 other super bubbles in the last 100 years or so. You had 1929, which kicked off the Great Depression, then 2000, the dot-com bust, and of course 2008, the big financial crisis. Every single one of them ended in an absolutely devastating crash. And his argument? Today, we're living through the 4th one.
Okay, so if we're really in a super bubble, what are the signs? What should we be looking for? Well, Grantham says these things don't just pop up out of nowhere. They actually follow a surprisingly predictable script. He basically has a 4-step checklist for the final stages of a bubble. Step 1, you need a long historic bull market. Well, we had one for over a decade, so check. Step 2, you get frenzied, totally unexplainable behavior. Think about the whole GameStop saga, the meme stock craze, the cryptomania. Check. Step 3, a final super rapid acceleration phase. And Grantham points right at the NASDAQ doubling during the pandemic. That's a surge 3 times faster than a normal bull market. So, yeah. Stages 1, 2, and 3, we've seen them all. So that leaves us with stage 4, the final stage, the beginning of the crash. And this is the kicker. According to Grantham, this isn't something we need to watch out for in the future. He says it's already started. The first cracks are already appearing, and the big flashing red light is a loss that looks something like this.
And there it is. This is the classic canary in the coal mine. Stage 4 always starts when the riskiest, most speculative stocks, the ones that flew the highest, start to fall apart. And Grantham points right at the NASDAQ, where more than 40% of the stocks on the index have already lost over half their value from their peak. Think about that for a second. This is a huge sign that the speculative fever is breaking and that the smart money is already sneaking out the back door. And once again, if you look at history, it gives you a pretty chilling roadmap. Right before the 1929 crash and right before the 2000 dot-com bust, the exact same thing happened. The speculative darlings of the market started to crumble, even while everything else kind of looked okay. And in both cases, a massive full-blown crash followed within about a year. So the question is that same pattern playing out right now?
So, as if a potential super bubble wasn't enough to keep you up at night, there's another huge problem complicating everything this time around, and that's runaway inflation. Grantham sees this as a massive crisis all by itself. And man, he does not mince words on this. He says, I define inflation as death.
People are going to starve. For him, this isn't just some number on a spreadsheet. It's a truly destructive force that just eats away at your savings, kills your purchasing power, and always hits regular, working people the absolute hardest. He truly believes it leads to real human suffering.
And this isn't just some academic theory, right? We're all feeling it. Inflation is at a 40-year high. And because of that, the U.S. central bank, the Fed, has been forced to basically slam on the brakes, and hard, by jacking up interest rates.
And this is the ultimate catch-22. The main weapon you have to fight inflation, raising interest rates, is basically poison for a stock market that's already super overvalued and floating on cheap debt. So the Fed's cure for inflation might be the very pin that pops the entire super bubble.
Okay, so given this, let's be honest, incredibly bleak outlook, what does Grantham actually suggest we do? How is a regular investor supposed to protect themselves through what could be a really brutal downturn?
His whole strategy is about one thing: defense. He's basically saying the US markets are way too expensive, way too risky right now. So instead, he's looking overseas for opportunities, to places like Australia, the UK, or Japan, where things are more reasonably priced. But his biggest piece of advice? Hold cash. Not just to sit on it, but to have it as dry powder. It's a strategic weapon, ready to deploy so you can scoop up amazing assets for cheap after the crash he thinks is coming. So the bottom line here is pretty simple. It's all about protecting your capital. His advice really boils down to this: avoid the US market in general because it's the most overpriced. If you absolutely have to invest here, stick only to the highest quality, most financially bulletproof companies you can find. Otherwise, look for value in other countries, and most importantly, keep that cash ready.
And all of this leads to a final, much bigger question that Grantham brings up. He sort of suggests that the rise of these mega monopolies, the FANG stocks, might be creating a problem. Sure, they make huge profits, but are they also stifling competition and slowing down the whole economy? Which leaves us with this really big, thought-provoking question to chew on. Is all this turmoil just another cycle, or could we be witnessing something much more profound, maybe even the end of America's golden economic age?